Hello and a warm welcome. You've joined us on Commodity Central right here on ET Now. I'm Ashish for you, and on the show today we'll put the spotlight on all the commodities that are buzzing in trade, and in particular we'll also talk about palm oil prices because they have been trending higher for the last several months. But will the up move continue, and what are demand trends looking like? We'll discuss all that and more in just a bit, but first up, the top headlines. Brent steadies near two-month low as IEA warns of record oversupply in the next calendar year. The data also shows that stockpiles set to build faster than the pandemic-era levels. US natural gas futures edge up from 9-month lows as forecasts of stronger two-week demand and near-record exports are aiding the move. Iron ore prices slipped for the second straight day ahead of China's steel output demand data. The industrial metal sits 10% above mid-June gains despite lingering problems in China's property market. Palm oil has now snapped its 4-day gaining streak as Malaysia hikes export tax and a stronger ringgit, which is now at a 10-month high, which is making the tropical oil costlier for global buyers. Bitcoin has now hit record high as investors pile into riskier assets. Fed rate cut bets and bullish derivatives contracts also fuel the action. Bitcoin jumped 7% in the last 24 hours, while Ethereum has also soared nearly 28%. Those are all the top headlines that we're tracking from the world of commodities. But first up, let's put the spotlight on the oil market then. And Brent crude is trading with gains of nearly 0.4% as we speak to trade near that $66 per barrel mark. But remember, IEA or International Energy Authority came out with their monthly report where they are warning of record supply of oil in calendar year 2026. In fact, they also say that global oil inventories will accumulate at a much faster pace next year, even faster than COVID and pre-pandemic era. So that's some important commentary that has come in from IEA. But remember, as far as Brent is concerned, all eyes will be on that meeting that is scheduled to happen tomorrow between Trump and Putin. And any kind of commentary with respect to peace talks could be a negative for the global oil market because that could mean higher Russian supply of oil in the global oil market, which could exert downward pressure on global oil prices. Meanwhile, as far as gold is concerned, that is trading with gains of nearly 0.4% today to trade near that $3,370 per ounce mark. Remember, yesterday we had some important commentary that came in from US Treasury Secretary Scott Bessent, where he again urged US Central Bank to slash rates. And now bets of central bank cutting their rates further in the meeting that is scheduled to happen in September have risen. And remember, any increase in bets for rate cuts is always a positive for the lower yielding assets like gold. So that's as far as the latest moves in the gold market and oil market is concerned. But while last month's consumer price index showed that food prices were effectively flat on a month-on-month basis, tariff-sensitive items like coffee, beans, specialty teas and spices are showing signs of inflation, worrying small businesses selling those products in the United States. Kanishka is now joining us with more details on this. Kanishka, over to you.
Good afternoon, Ashesha. Well, tariffs are brewing trouble for small US businesses and the morning coffee might be the next casualty. Now, even though overall food prices were flat last month, that's July, tariff-hit staples, they are surging as per reports. Now, coffee prices, they're up 14.5% year-on-year basis in July to that $8.41 a pound level. Now, and following this, small cafes are also seeing spikes in costs of about 18 to 25% since January. Now, the Tax Foundation says that 74% of America's food imports worth $163 billion now face tariffs. For small specialty brands, there's no easy workaround. A steep 50% tariff on Indian tea plus levies on spices and packaging is also forcing owners to hike prices or compromise on quality, a choice many say could push them out of business. So this squeeze could soon spill over to grocery aisles as well, shrinking variety and hitting low-income shoppers who rely on SNAP benefits. And it's not just coffee and tea. Avocados, tomatoes, bananas and kiwis, they're also on the tariff list, setting the stage for a costly shift in what ends up on America's plates.
Indeed, so inflation is set to rise in the United States, especially of the products that Kanishka just mentioned. Kanishka, thanks so much for joining us with all those details. But shifting focus to the palm oil market now, and palm oil futures have climbed nearly 4% in the last 1 month, 8% this year so far, and nearly 11% over the last 1 year. And the uptrend clearly is hard to miss, isn't it? But the big question now, will this rally sustain? Malaysia, which is the world's largest palm oil producer, accounts for nearly 34% of India's global edible oil consumption. And just last week, Malaysia assured that India's push for self-reliance isn't a threat for Malaysia, reaffirming its position as a key long-term supplier of palm oil to India. To unpack what this means for prices and trade flows, we are now joined by Mr. Sandeep Bhan, CEO at SD Guthrie International Trading Pte. Mr. Bhan, thank you so much for taking your time out and joining us here on ET Now. And the first question has to be with respect to prices. Look at the kind of move that we've seen over the last 1 year. In fact, not just 1 year, if we look even at the shorter term periods, palm oil prices have clearly risen in the global market. Do you think perhaps we will see a reversal as far as these palm oil prices are concerned?
See, the first, thanks for having me. The prices rallied in last few days only. Actually, it was trading at in the futures market here at 4250 levels. On 11th of this month, Malaysian Palm Oil Board releases every month a stock report and the production report. This report was expected to be a bit bearish on the markets with end stocks in the month of July expected to be around 2.3, 2.4 million tons. But surprisingly, this report came out with a stock level of 2.1 million tons only, which was considered bullish report. And after the market opened in the second half of 11th August, the Chinese funds interpreted this report as a bullish report because it was a signal that in coming months, production will be lower. We are going to be seasonally into lower months. Supply is not going to be big. Stocks are going to be limited. So they push this market higher. And during the day, the news of Indonesian news came that they might be starting B50 biofuel next year, if not in January, but in the following months. That was enough for this market to be rallying. So funds-driven rally pushed this market to 4,500 ringgit, but this rally was purely funds-driven, not followed by the physical demand. So currently, the market's touched a high of 4,500 on the futures, and at this level, it's kind of finding it a bit difficult to go higher because physical flow is not following.
So that's as far as pricing is concerned. But Mr. Bhan, if you can tell us what is the differential now between palm oil prices and soy oil prices, and if that differential will matter going forward in order to determine the outlook for palm oil prices going forward?
Well, definitely the differential is of significant impact, particularly from the Indian context. If we see the October, November, December shipments of soybean oil and palm oil, we are virtually trading neck to neck at same price. Palm oil today is hardly $5 or $10 discount to soybean oil. That definitely will have an impact from an Indian perspective because India needs this discount to be more than $100, CPO at around $100 discount to soybean oil for CPO's big shipments to India. If this spread remains at current level, then demand from India will definitely slow down.
Okay, so and since we are talking about demand, Mr. Bhan, also wanted your thoughts on the kind of demand trends that are emerging from global markets, especially from a country like India, which is a big importer of global palm oil. If you can tell us, especially ahead of the upcoming festive season, how are demand trends looking like and what is the sense that you're getting from on ground?
So India did quite a very good buying in June, July, and even August is also expected to be a good month. That was all in anticipation of festivals coming. And then we are seeing now a bit of a slowdown from India. They are not following, they are not chasing the current price levels. But in terms of festival, if we would say, is there enough oil in the system? Yes, there is enough oil.
Okay, so that's as far as demand is concerned, but also wanted your thoughts on any kind of tariff-related uncertainty that we are facing for the global oil market. Is palm oil likely to be impacted on account of that, especially because there is still a lot of uncertainty. Tomorrow there's this important meeting between Trump and Putin. What impact will these global developments have on global palm oil market?
See, earlier we had this, the tariffs were 29% and between 32% between Malaysia, Indonesia, and US, but those have been now streamlined at 19% for the both countries. So it remains same, not major impact on tariffs to the palm oil industry. In terms of crude oil prices, whatever comes the outcome tomorrow, our biofuel program of Indonesia is still a success one. They are still pursuing B50, so it won't have any significant impact.
Understood. So that's as far as pricing trends are concerned and the kind of global volatility that we are seeing, especially, in fact, not just in palm oil, but for crude oil as well. But we also had some important commentary that came in from Malaysia a few days ago, where they're saying that they will continue to play a key role of being a key and long-term supplier to India, and they do not see India's push for self-reliance as a threat. How do you read this, and what does this mean for India's self-reliance as far as producing palm oil in India is concerned?
See, we are happy to see India becoming self-reliant. We'll be very happy to see India having its own growth in palm oil. But India being a biggest consumer of palm oil in the world, the need is going to grow continuously. Even if India produces locally within India the palm oil, but our consumption is growing. So this consumption growth over the next 5 to 10 years will not be enough that what India will produce. India today is targeting by 2030 a million ton. On the ground, it is 300 to 350,000 tons today. Even if India produces million ton, but India's consumption is also equally growing. So it's good to see India producing, but it won't have any significant impact. Malaysia will still continue to be a key supplier of palm oil to India, which is not only Malaysia, even Indonesia or Thailand for that matter.
So Malaysia, Indonesia and Thailand will still be key suppliers of oil to India. That's the word coming in. Mr. Bhan, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is for palm oil prices going forward. Thanks so much for joining us today.
Thank you.
But shifting focus